Yeah, black swan's more extreme in the sense that no one was expecting it at all. So it's not even in the realms of possibility. So it's a complete surprise.
Okay.
Whereas a grey swan is something that's, that we can imagine right now, but it's very low probability. So there's a slight distinction between the two.
So let's start with the latest developments out of the US, the political developments, the first stage of the impeachment process, and obviously the trial at the Senate is yet to begin. How much of a grey swan do you see that being in 2020, at least for financial markets?
Yeah, I mean, I think at the moment, the way the markets are looking at this is that the market thinks, obviously, that Trump has been impeached, but he won't be convicted in the Senate. So that's the base case. And a grey swan would be if he was impeached. If he was convicted, I should say. But we think that's unlikely. The Senate is majority Republican, so why would they dislodge their own president?
And certainly that's the way the markets are behaving.
Exactly,
if you look at the market price action yesterday, I mean, it's almost as though the S&P and the Dow really are not watching at all what's happening in terms of the political backdrop. Yeah. But then equally, we do have an election coming up in November as well. How do you think that that is going to factor overall into potential risks that could pop up? Because I get the sense now, looking into next year, that people are yet again feeling a bit complacent about some of the risks that are out there.
No, that's absolutely true. I think with the US election, the campaigning seems to have gone earlier and earlier and earlier. So I think people to some extent are just beaten down by the amount of coverage there has been on the election. Nevertheless, as we get closer to the election, it will be a major market event. Interestingly, the market will view a Trump re-election as positive because he's more pro-business, assuming that he doesn't pick a fight with China along the way. Yeah. Moreover, it also depends on who the Democrats pick as their presidential candidate. If it's Warren or Sanders, then the market would view that possibility as quite negative. Whereas if it's Biden or Buttigieg, then the market may not necessarily view a Democrat win as a negative.
More centrist policy. Let's talk about the trade angle. One of your grey swans for next year is US introducing capital controls. Under what formats and why would they do that?
Yeah, well, this is kind of a big theme, I think, is a real possibility. One is that already we have a trade war between the US, where the US is focusing on the trade in goods and services between US and China. The larger question is the strongest asset the US has is intellectual property and its corporate performance. And so what we have been seeing in recent years is that there's been significant Chinese investments in Silicon Valley. Chinese companies are buying US companies. So the US could say, hang on, we're not going to accept that anymore. Already the US...
Indeed, we saw that with the case of Qualcomm earlier this year.
Exactly, with Qualcomm. And also, interestingly, there was a Chinese company that owned Grindr, the dating app, which the US, through CFIUS, forced the Chinese company to disband that because of the data sensitivity there. So what we could see is there could be a more extreme move in that direction where the US says almost all Chinese investment in the US could have to stop. And this would be viewed in the context of a kind of a Cold War between the US and China, where the US says, look, we won't accept any form of Chinese acquisition of US.
And certainly, given the way tech has performed this year, up north of 40%, there's room for disappointment. One other market, grey swan, that I just wanted to turn your attention to as well. I'm not sure if we have it up on the board, but that is of Japan intervening in FX markets. That could be a significant shift as well out of the central banks. I mean, only this morning we have Riksbank hiking rates from negative to zero. And it looks as though many central banks out there have realized that negative rates really are not succeeding at stimulating the economies as much as they would have liked. Which is why I guess you would see a case for Bank of Japan.
I mean, I think what we've learned in recent years has been that zero rates, negative rates, quantitative easing, it just doesn't have the same impact on an economy as when you're in the middle of a crisis. And in the case of Japan, they raised sales tax recently. The economy is slowing down sharply. Next year, growth could grind down to zero, or if not negative. And so the question for Japan is, what can it do? It doesn't really have much options on the monetary policy side. It's already buying bonds, it's buying equities. So the one thing that has worked in the past for Japan is intervening in currency markets. And so there could be scope for them to intervene. It would elicit a US reaction against them, of course, which is the big reason that could hold them back.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.